It is Monday morning, March 16th. The market will open in about 30 minutes, and we're supposed to open a little higher this morning. That would be nice. It's been a rough couple of weeks. The stocks have been selling off principally because oil prices have gone up and they've stayed up. I think the conflict over in Iran and the Gulf Coast is really keeping oil prices higher. And the higher the oil price, the less money that's left over for the rest of the economy. It takes a lot of that discretionary income that consumers have, vaporizes it. They don't have money to go spend on extra stuff that they maybe would like to have. They just stick to the necessities. Businesses have higher input costs, transportation costs go up. Just the list is long. Oil price really affects the economy. There's a few categories or a few sectors of stocks that are going to do well in a high oil environment. We can talk about that in a little bit and talk about some stocks that are interesting this week. I am joined by Daryl. How you doing, Daryl?
I'm doing great, Victor. It's good to be here. Hello, everyone.
It is great to be here. I look forward to seeing your analysis. And for all those that maybe are new to the stream, we go over stocks. We try to be pretty I think we cover a stock broadly. We look at fundamentals. Is the business doing well? Are they growing their top line revenue? Are they profitable? What are the characteristics of that business? Do they have big margins, small margins? Do they create a lot of cash flow? Do they pay dividends? That type of general assessment of the business. Now, as we have seen, especially around some sectors like software, you may be staring at a really good looking business. Everything looks good, but the market's just selling it off like crazy. Well, that's where Daryl comes into the picture, which is he looks at a stock from a technical perspective, looks at how a stock is trending, and he observes if he thinks it's a good time, bad time, if the stock's rallying higher, or really caught in a downtrend. All that information is really interesting, especially for a guy like me. I'm more of a fundamental analysis guy. I really like owning businesses for a long time. So when a colleague views it from a different lens, I'm all ears because I get to learn something that's very organic in my learning. And I look forward to hearing Daryl talk about stocks. So just to take a look at a quick glance of where we are with the market year to date. This is the heat map year to date. Let's go over the winners and then we'll go over who is getting beat up this year. In 2026, we are 2.5 months in the books. We're closing in on the first quarter of 2026. And it looks like energy is doing well because oil prices are high. And I kind of like owning oil stocks during, this period, buying into this space even further. But it's a little bit of insurance, right? I personally buy into it because if oil prices go higher and I own oil stocks, then obviously those particular stocks are going to do well in my portfolio. But I also know that, hey, my other stocks are going to get taken down. The prices of my other stocks are going to come down. And it's going to create opportunity, long-term opportunity, but short-term, it's not fun to watch Meta go down. It's not fun to watch Amazon go down. It's not fun to see Microsoft go down. It's just the nature of stock investing. For a while, the market just doesn't want to invest in those. The investors are flocking to energy. They're also going to consumer staples, saying, hey, I can wait this out by buying some Coca-Cola. And Coca-Cola is up 10.6% year to date, and it pays a dividend. Pepsi, 11.4, Walmart, 13.5, Costco, 17%. Costco's having a pretty decent year, huh?
Yep.
And we've got a good number of safe stocks that, you can just wait this thing out. It's like being caught in a giant storm. Whatever dwelling you can get to stay dry, maybe sip a cup of coffee, you're good with it. Maybe a tiny little coffee shop that is a little crowded. You're like, hey, this is great. I'm out of the rain in the coffee shop sipping coffee. That's a consumer staple right there. Just get yourself out of the rain until the market conditions change. Utilities are doing well. That's a safety category. Some industrials have really stood up tall. Of course, the ones that are defense oriented, they're doing well because there's going to be more orders of missiles and defense equipment. GEV still going higher. Caterpillar, Deere. And I think these guys, I know that GEV is a power generating entity. They're selling turbines to generate power. Caterpillar and Deere, these are a little bit of a mystery to me because this war is, in my opinion, going to slow down infrastructure spend, infrastructure outside of the data center. Of course, the data center is being built out, but what about roads and just normal infrastructure, physical infrastructure? Well, while we have high oil prices, maybe capital goes elsewhere for a while. So we'll see how that plays out. Telecom's doing well. Verizon, look at Verizon, just really cleaning up. Good job, Verizon. The semiconductor materials and equipment space has done really well. Computer hardware has done well. Micron's flying high this year, 49%. Even Intel's caught a nice bid. But it's not, some spaces are really beat up. And I'll start, of course, with software. Software is down a lot. Adobe announced last week they got taken down quite a bit. They're going to get a new CEO. And did you follow Adobe at all as they announced and so forth?
A little bit. I saw that they beat on the top and bottom lines, but the market wasn't very happy with it and drove the price down.
Well, they announced that their CEO is going to retire, and they didn't announce who's going to take over. So now it's okay, so your CEO is going to retire and you don't have a replacement. It created some concern or kind of a blind spot, right?
Yeah.
Adobe could have done better. This is a big company, and succession planning, especially if you have a CEO that's been in the role for 18 years, 62 years old, good for him. He's going to retire. Good for him. The company could have operated far better and had somebody identified and saying, hey, we're going with so-and-so. He is going to go into this AI era. He's going to, blaze a new trail for Adobe. They could have taken the moment and done something positive with it. Instead, they're like, hey, this guy's retiring and we don't know who's going to run the company. Really? Your stock's being hammered.
I don't know if he's really retiring. He's staying as chairman of the board, so he's not retiring, I wouldn't say.
Well, he used the word retire. The company used the word retire, so I guess I'm going to go with the word retire. Again, the point being is, well, if you knew that he wanted to step out of the CEO role and just be the chairman and kind of mentor whoever the CEO is going to be, you just put some thought into it because your stock's already been hammered so bad. If you have basically an expected vacant role at the top of the company, that's just not a good idea. But that's like me Monday morning quarterbacking, saying, hey, well, the team that played, yesterday or the day before could have done better if they had done this, that, and the other. So, my remarks are just remarks. We'll see how things play out for them. But software space has been beat up, and I think this space will at some point reward investors to pick the right stocks because these companies have very desirable fundamentals, and those fundamentals aren't going to go away. These software companies are not going to go away. They're going to be around. I've put a lot of time and energy into AI, learning it and knowing where it's going to fit in the overall technology space, the software space. And I could say that, yeah, AI is going to probably affect a lot of areas. For example, Hollywood is really freaking out over AI because AI can create like movies, or you think about a movie scene where maybe you had 50 extras in a area to kind of fill in the scenery, but you had the main actors. AI could totally do that. And FYI, Hollywood was already doing that through artificial graphics. You know, if you look at Star Wars, right? That's like 50 years old. Maybe that's stretching at 45. I don't know how old Star Wars is, but back in the day, they were trying to do some special effects. Well, that's kind of artificial, right? Obviously, they weren't filming in space. And you can go on and on. You look at the Matrix and so forth. So now with AI, I think there is going to be disruption in movie making and creation of movies and scenes and so forth. Any software that has that type of creative process is going to be affected. I think AI is going to probably limit that particular company, as well as companies that are providing data. Like if you're a big data company, I think the future is going to be good for us, investors, good for consumers. We're going to have a lot of good data at our disposal for free. Bad news is if your business was to own that data and then charge people to access that data, your business might be under threat. And we'll see how that plays out. So, a lot to play out there over the coming years. It's going to take a while, maybe 5 years, to really see who is really going to rise to the top. Financials have been also affected. I think the main story that I've heard that is affecting financials is that private private equity companies, the Blackstones, the BlackRocks, have made some loans that are going to go bad. And the comments that Jamie Dimon made like 2, 3 months ago, hey, there's cockroaches in the system. It's really becoming a reality. And that's affecting a lot of those stocks. Any comments on financials that you've observed and wanted to comment on?
Yeah, I think the treasury spreads are hurting them a little bit as well. So it'll be interesting to see how that plays out. I think they'll be okay in the long run. So basically, during the financial crisis, the federal government really tightened the rules on the big banks, and that's how the private credit firms became a reality, like Ares Capital, Main Street Capital, and some of these other ones. They weren't under the same rules that the banks were. So I think the
Yeah,
banks will be in a pretty good position in the long run.
that's a good point. Yeah, I agree with you. And just kind of jumping off a few things that Daryl said. So the credit spreads, right? So one thing that's been happening, especially this past week, is interest rates went up. And when interest rates go higher, bond prices go down. They go lower because bonds have to compete for investors based on what they're going to pay from an interest rate. That is throwing things out of whack because 6 months ago, I fully expected that rates were going to begin kind of a slow descent. We were expecting this year that we are going to have the Federal Reserve lower rates. People are arguing, are they going to lower them 2 times, 3 times, 4 times? Were they going to lower them early in the year, late in the year? And the chairman of the Federal Reserve right now, he's got a lot of credibility in my book because he said, hey, let's not act too a little too quick. Let's be data dependent and so forth and so on. And I'm glad that he was wise enough to do that because at this point, if they had lowered rates, I think it'd be more confusing and it'd be maybe riskier. At this point, they do have the ability to lower rates in the future. right now we have to keep an eye on inflation, which has been the readings on inflation have been that the inflation is higher than desired. Interest rates are going higher. Oil prices most definitely are much higher, and oil prices cause inflation. Okay. So if you don't believe me, just go to the gas station and fill up your car and compare it to what you paid last month. And you're like, yeah, that's inflation for sure. So I think that's affecting the financials. If anything, it's a lot cloudier today than it was a couple months ago. Any thoughts on, where interest rates are going?
I think the market is definitely pricing out multiple rate cuts. I think the next one, I'd have to pull up the Fed rate watch tool, but I think the first one is in September, and that may be the only one we get at this point.
Yeah. And, one of the, like 6 months ago, it's probably because a lot of the business channels, they need to find topics to talk about. And they would just endlessly talk about, oh, is it going to be 2 rate cuts, 3 rate cuts, 4 rate cuts? And I tend to kind of put that off to the side because what ended up happening was all that conversation is completely a waste of time because the Fed's going to be data dependent. As things evolve, they're going to make those decisions. And some predictions are hard. Where will interest rates be? In general, I thought they were going to be lower this year. But what's proven to be the case is, hold on a second. We didn't know oil prices were going to be much higher, but now that they are, it kind of changes the environment for interest rates. You had
Yeah,
something you wanted to share?
the first one is scheduled for September, according to market participants. They're the ones that buy the Fed funds futures, stuff like that. And then that's the last one until 2027. So
Jeez.
they're even counting out 2026 at this point.
Man, so interesting. So I got to raise my discount rates on stocks. Yeah, good to know. Good to know. All right. So that's the heat map that we're dealing with. Looks like we've got one request already to take a look at Visa. Good morning, Ricardo. Good to see you. Put that on the list. So we're going to cover Visa. The stocks we thought we'd cover, starting with Visa. Then we're going to go to Futu, which is a financial services company in Hong Kong. And I think they're doing quite well in China. We can talk a little bit about China and Asia as well. Nebius, they announced that they did a big deal with Meta and their stock's flying high. Micron, which is going to announce on Wednesday, that's been a super success story. They do memory and their revenue is going off the charts. It's going to be temporary, but boy, the stock's just been flying higher. So we can take a look at Micron. All right. So I think that's it for kind of an opening. We're at 6:20 Pacific, which is 9:20 Eastern. Let's jump into Futu, kind of get things working. Futu, if you're not familiar, is it's a brokerage, a lot like Robinhood, Charles Schwab. And here in the U.S., you may know them as Mumu. And in Asia, they're known by their corporate name, Futu. And why I think it's a good idea is most definitely here in the US, we have a lot of retail stock investors. Probably everybody that's tuning in is a retail stock investor. And there's a lot of them in Asia, China, Japan, Hong Kong, Korea, Taiwan. And you better believe they want to take their savings and they want that savings to work for them. If they put in the bank, they earn a couple percentage points of interest. Well, if their friend or somebody they know is doing a much better rate of appreciation, especially for Chinese stocks that have been performing really well for the last 2 years, a lot of people go and put their money into Futu, and buy stocks. Can't blame them. Or they buy some ETFs. Can't blame them. So this company's been doing quite well. The 1 year, this stock's up 26%. But I look forward to seeing what Daryl has to say because the stock hasn't really moved a whole lot from middle of 2025 to now. It's down 24%. Overall, you see that if you bought this stock at the right time, you really did well. Heck, you could have bought the stock for $33 a share. We're up to 141. And you see that the trajectory over the last 3-4 years is really, really positive. The company has been growing quite well, all green on the screen when it comes to revenue growth, and especially this 2025 year, 76% growth. Really, really good. And they're a pretty good size outfit. It's not like they're a tiny company. So the revenue growth is really good. They generate really good free cash flow. Analysts think it is highly discounted. Maybe this consolidation period we've seen is really creating an environment that's really good for this company. It's expected they're going to keep growing. That looks good. And when I look at the big picture qualitatively, right, if I look at China, Korea, Japan, all those economies, they're not intimately involved with the war right now. They're kind of spectators, right? And China doesn't have like warships, and maybe they do, but they're not engaged in the Gulf Coast. They don't have their soldiers out there. They're not expending military hardware. So they're not in the conflict. The other things is I think the relationship with the US, I think, is better than it was a couple years ago. I think there was a lot of like tension. Now, I think the tension isn't there as extremely. And I think that's doing good. So, where I'm leading to is the economy in China and surrounding countries is doing well. And I think is really poised to do better as well. The exports coming out of China really were really, really high. They grew really fast. All that means to me is people in Asia are making money. People are saving money. People are taking money, capital to Futu, putting it in their accounts, funding their accounts, buying stocks and equities, buying investments, buying crypto, investing so that they could have a really solid future, whether it be a retirement plan or they just want to have a lot of money. All those things are happening. So the big picture overall looks really good for Futu in Asia, in my opinion. I've got a full valuation, but I'm curious to see what Daryl's got to show on the charts. Let's flip over to Daryl and see what he's got to say on Futu.
I went back 5 years on this one and I put an auto support resistance line right at these two peaks. And then we had the breakout in July of 2025. It raced above that and has been trending back towards that line at the moment. I'm not going to put it on here right now, but if I were to put another one, it would probably be somewhere right around 62, right around this confluence of price support right here. I'm not going to put it on there because when we zoom in, it'll jump down outside of that particular panel. So I'm going to, normally I zoom into a year, but this one has been trading pretty much sideways for 4 or 5 months and then started the downtrend at the beginning of the year. So it gets a little congested. We do have a death cross. So the 50 has crossed below the 200. The 50 days declining, the 200 day is still increasing, but it looks like it's somewhat leveling off. So my first inclination is that I would keep an eye on this auto support resistance line. That seems to probably be a pretty good price. And when I looked at Fast Grass, they had gotten way overpriced at one point, and now they're still trading just slightly below their normal market multiple, which is the blue line, and their fair value is calculated at 15 times, and it's this orange line. So they still look a bit overpriced to me, looking at Fast Graphs, and makes me think that this come into play. If they break down through this line sustainably, then that's where I would start looking at that lower level price. So they're 21 days declining, the 5 days declining. The RSI is right at the 40 line. That's usually a pretty good place if they can hold that RSI and start moving back higher. But they really haven't broken above that 40 line since the early part of January. And even before that, they only had probably 2 weeks where they had any good momentum. And if you exclude that 2 weeks, then, I mean, they've pretty much been in a bearish configuration since the 12th of November. The PPO is in negative territory, and we have the black line looks like it could cross back below the red, so that's not necessarily a good place to be. And I'm also seeing predominantly distribution since about September of last year, although the money flow is positive at the moment. And I do see some accumulation that picked up for 4 or 5 weeks, but we are headed back down at the moment. So I think this one probably has some room to the downside at this point. The momentum is definitely pushing it lower.
Yeah, I've noticed it. It's just been going sideways now. When you buy, it makes a big difference. I bought this stock when it was quite low, so it just continues to show me just a really good return. So that is what fuels my patience with the stock, and I've actually been buying into Futu. Let me kick it over to my side and show you my evaluation. Overall, I think Futu's discounted by 44%. I value their free cash flows, and I make my own estimates on this business because this is a business that is really, I think, resembles Robinhood or resembles Charles Schwab. It's just in Asia. No problem. It's pretty much the same business operating out there. So the cash flows look really good, and the earnings per share looks really good. I'm using a higher discount rate. So I think this is going to be a stock that I don't have a giant position. I own far more Robinhood than I do Futu, but I think accumulating some shares might be a good idea for me. They announced their earnings and on the 12th, that was Thursday. And I usually scour through and read, what's important to me, but I've been either, depending on how you view it, either I'm getting lazy or I'm getting smarter or both. And I've been using AI to summarize these earnings. Like I tried Gemini, tried Claude, and Claude did a better job. It really shows that revenue growth looks good, and it's having a very good year. We knew that. Earnings per share. Here's the earnings per share. It graphs information nicely. So revenue growth is good. Profit. Look at this profitability. Beautiful. All right. And we've got, they're making it off brokerage commissions, net income margin. Very good. So overall, Futu's showing me what I want to see, which is, hey, you're growing your top line, you're becoming bigger. And I also get exposure to Asia. Now, most of my portfolio is with US based companies, and I'm in the US, so perfect. But it's also nice to have some stocks over in China. And as I think the Chinese economy, again, doing quite well. I think they're set to grow. They're probably going to grow a lot faster than here in the US. That's more factual than anything, right? And right now, Futu's gone up a little higher, which is good. What's the market doing overall? So, market is higher. We were supposed to open higher. It might be a little too early. It's 6:31. The servers over at Google are just waking up. And S&P is up 0.89, Dow's up. The Nasdaq is down. Huh. That's a surprise. Why would the Nasdaq be down?
It's up 1.15%.
So those I guess the Google servers are so busy with Gemini requests, they can't keep up with Google Finance anymore. Yeah, it's pretty green out there. Whew. Let me put some sunglasses on. Nvidia's up nicely. Micron's up real nice. Meta. So Meta announced, now this one's kind of bad news is good news, I guess. Meta announced that they're going to be laying off some people so that they can improve their financials. And that's kind of to counter the capital expense that they've been investing in their data centers. So that's kind of a stock rally due to some bad news for employees. The semiconductor space is just flying higher. Looks like software is picking up a bit, but not Adobe. Adobe is still in the doghouse. Jeez. But CRM, Uber, Intuit, they picked up a nice little bid. So it's a nice green day out there. Looks good. Energy coming down. Even though the oil price is higher, it's a good opportunity for me to buy some more energy stocks. On days like this, I just pour into it. And again, I'm buying it because of insurance. If we have days like this for heck the rest of the year, and I lose my shirt on energy stocks, I am the happiest guy on this live stream because most of my portfolios over here. So I'm like, all right, cool. I did great this year. Instead, let's say the other way around, which is oil prices are going to be persistently higher and they really affect the economy. My oil stocks are going to continue to fly higher. So I'm good with that. Staples have opened up a little higher. Interesting. All right. So let's get over to Visa. Ricardo wanted to look at Visa. And we'll look at Visa. We'll also look at American Express. And I looked further into American Express and decided not to buy into American Express. And I'll explain why. All right. So Visa. I don't think I need to explain what Visa does for a business. Everybody look in your wallets. You probably have one Visa card at least. And these guys have not had a very good year. They're down 7% over the 5-year. Not a really fantastic stock. Over 5 years, 37.6%. I mean, if you compound that, it's probably like 6%. Not performing up to par. They should be doing far better. Now, this company is a big cap, $588 billion. They have this very, very well-defined moat, competitive barrier, which is their network, the Visa network. They pretty much created the highway network for transactions. When we go around with our Visa card and transact with it, these guys make money. And they partner with financial institutions that are issuing out cards. Online, they also are part of the online economy, of course, where they're allowing people to buy stuff online with their Visa cards. The forward P looks pretty good, 23. Small dividend. Analysts think there's a discount of 29%. I'm going to agree with their discount, most likely. But what will be interesting to see is why is the stock not going higher? The economy, especially maybe right now, I can understand that, okay, over the last month, I can understand this. We have high oil prices. But for the last 3 months, I mean, 3 months ago, I thought the economy was going to do okay. And interest rates are coming down. Well, Visa doesn't really make money on interest rate or net interest margin. Just when people use the network is when they make money. So I thought that it was interesting that investors were selling out of Visa. So that's what I've observed out there. Visa is a steady grower. Look at this growth, just consistency. And usually investors pay up for consistency. Okay. And this is very consistent. You want to look at some awesome gross margins? Let's take a look at some awesome gross margins. 81% gross margin, 50% profit margin, 55% free cash flow margin. I mean, these numbers are like beautiful numbers. Just great numbers. Consistent growth, high profitability. When we look at their forecasts, this is Visa. 20 analysts are covering it, 29% discount. Consistency. That's what you get out of Visa. And the way this thing's setting up, I mean, I look at Visa and I'm like, geez, this is one of the best names I could own. This is Visa. So I'm surprised Warren Buffett's not in it, but he's an American Express. He loves American Express. He's made a boatload of money on American Express. So he's probably like, yeah, I'm good with American Express. Profitability is going to expand nicely, bringing down their PE ratio. So this is looking pretty darn good. Let me kick it over to Daryl, and then when we come back, I'll show you my evaluation on Visa.
I'm going to start off with the 14-year trend channel. I like to step back and look at a big picture when we have one. And this goes back all the way to 2011. So we were coming out of the great financial crisis here, or the global financial crisis, whatever term you want to use. And basically, we've just drawn this line to connect as many lows as we can, make a copy of it and drag it up to the top. I normally make one other one, make it dotted and just kind of put it in the middle as a reference point, but I won't do that for this one right now while we're live. But one of the things you can see, they traded up to the top of the trend channel on the in July of 2021. Then they pretty much traded sideways, which basically got them down to the bottom of the channel. They moved closer to the middle, back closer to the bottom, to the middle, been trading sideways now for basically since February. So they're getting close to the bottom of the channel. So I would keep that in mind for longer term investors. This is a 14 years worth of data. They have not dropped out of that channel since we drawn it, though they may be out of it right at the moment if I want to get technical here. So maybe I'll go into just fewer years. Yeah, so they have dropped out of the channel. So keep that in mind as well. I always like to see them, if they do drop out, to get back within the channel before too much time passes, because I can show you charts like Nike that fell out of their trend channel and have never recovered. So that's not a good sign when they do that. So let's go to just 1 year of data. The 200-day has rolled over and is declining. So although we could see that there was a downtrend right here, the 200-day didn't confirm that until just recently, but that is now downtrending. The 50-day crossed below it sometime in October. This is at 3 years. I don't know why I went to 3 years. They're trading below a 21-day moving average. Looks like today they're going to be up just a bit. They did get pretty oversold as far as these goes. They don't normally get technically oversold, which would be below 30 on the RSI. But we did get a sell signal on them as far back as the 9th of January, and that would have been confirmed by the by the RSI crossing below 50 on the 12th. So an early signal on the 9th and confirmation by the RSI on the 12th, and it's been declining pretty much ever since. So I was looking at a support level. We do have the low back last April after the tariff announcements. So that would be a line of support, probably around 299 or so. They're currently trading at 309, so they're about $10 above that price. Given this downturn in the momentum, it would not surprise me to see them there actually.
All right. Thank you, sir. So coming back to my screen, Visa's discounted, and I'm agreeing with the analyst that this thing's discounted. It's a very reliable stock. It's a little surprising that they have underperformed the market, but it is what it is. It's just a big cap. And overall, it's a 26% discount. Am I compelled to buy it? No, not yet. I'm seeing within financials some better opportunities with more compelling discounts. I'm also not seeing the momentum in the stock. So that's where I'm at with Visa. And I don't know that Visa is going to be a great stock for the next 10 years. And here's what I'm thinking is technology is really, really changing fast. And if you look at where the blockchain technologies are, those technologies may someday threaten this moat. And if it does, Visa has nothing. If their network gets replaced by some other network that maybe is more a tokenized network or something like that, then Visa is going to be in trouble. And it's just not enough there. So I'm going to stay out of Visa and keep my capital in other stocks. So that is Visa. Now, looking at that heat map, it's still nice emerald green, looking good, looking real good. Man, I think we should look at Micron because it's going up so much. Looks like we've got Peyton on the stream. Good to see you, Peyton. We got Dre. Very good to see you. And let's take a look at Micron. It's flying up. Micron's just been a tremendous stock over the 1 year. It's up 370% over the 5 year. Now, this stock kind of went up with the whole data center build out. They do memory. They manufacture memory, and memory needs to be on every server, every computer, and so forth. And memory prices have gone up because of the scarcity. And Micron is one of the big three. There's Hynix. Is it something? Hynix is one of the big ones, and then that's a Korean company, Samsung, and then Micron. And those the two that I named are bigger than Micron, but they can't keep up with the demand. There's so much building going on in that data center. So the market cap of Micron has gone up to $478 billion. And their dividend really not very good. Forward P is 9 because they're making so much money. They are priced a little too high, according to the analyst. Now, the stock like Micron, I believe that it's a very cyclical business. You have periods of growth, periods of contraction. And am I looking at the annual? Yeah. And this is right in the heart of 2023, right? It's not like a weird year like COVID. And it's expected they're going to have a contraction in 2029 and they're going to have a slowdown in 2028. And these are fiscal years. So this is about 2 years away. So yeah, they are having a real nice period of time. The year they're in is probably record setting, but it's not like Meta that just constantly keeps getting bigger. Company keeps all that revenue and then they add on top of it. No, it's cyclical. It's going to go up and it's going to go down. And that's part of investing in Micron. If you invested in it, congratulations and good luck going forward. I did not invest in Micron. I thought that I didn't see this coming, frankly. I do have other semiconductor stocks, but not this one. This has been an absolute winner for investors. Let me kick it over to Daryl to look at the charts on Micron.
Yeah, I noticed that they had higher prices during this phase, September, October, November, and I had drawn a bearish negative divergence, but the worst sell-off we had was only to the 50-day 2 times. So that wasn't a bearish negative divergence. It really carried it lower, and that has since been broken because now we have momentum that's almost as high as we had back in September. So this bearish negative divergence is going away. They are trading up today, 6.18%. They do announce earnings a little bit later this week. They do have an RSI that's above 60. It's currently at 62. The PPO is in bullish territory, and we have a signal line crossover here. 50 days moving higher. 200-day is moving higher. 21 days moving higher as well. Accumulation looks fantastic, just up and to the right, currently at a 52-week high. So they're looking strong going into the earnings.
Yep. And I have Micron priced too high, and it's because I think they're cyclical, and I've been wrong on Micron. Okay. I have a methodology. I have an investing method. I have something that works for me, and there's probably thousands of ways you can invest in stocks. My method is to try to, either identify stocks that are going to be cyclical, buy them at the right time, sell them at the right time. Micron surprised me and I didn't get involved with it. But if I look at a business that's over the next 5 years, that's, I'm trending cash flows for 4 years and then terminal value. It's just not adding up. And at some point, investors will have to leave the Micron stock, or you're going to see a pretty good price decline. And even the earnings per share is hard to sustain a stock like this. One of the things I didn't show is Micron doesn't have the same profitability as an NVIDIA. They're enjoying a very good period of time with higher pricing, but the profitability is just not as robust as an NVIDIA. Gross margins, you see that sometimes they really struggle, 22%. They're enjoying 45% gross margins. Profit margins at 28. But look at that. They lost a lot of money here. They barely made money there. So this is part of my, okay, well, I'd rather own NVIDIA. It's going to have a pretty good run. And DJ's got a comment. So
the implied move for this week is plus or minus 10%.
Wow. Yeah. And you're right about their memory being in short supply. I totally agree with that. And the next 2 years, I think we saw their forecast, but that could change very quickly. I mean, we've got a war going on, right? If that war got worse, and all of a sudden, for the obvious reason that everybody's focused on that war, the data center is going to slow down because they're going to be like, no, we can't spend our energy and time on making AI even cooler and nicer and neat and so forth. We've got a major conflict going on, and that could just interrupt some of this demand. And just as quickly as Micron has flourished, things can turn. So let's keep at it. Let's keep investing DJ, I hope you're in Micron, by the way. I hope you're making a boatload of money on it. And I hope you make more money on it if you are in it. But those are the things that I'm seeing. And again, I've got my process. I did great in 25. I'm trying to figure out 2026 to do well. And some stocks are not going to be in my portfolio that do great. Micron's one of them. So congrats to all Micron investors. All right, so let's take a peek at the market. And while, to prove I can walk and chew gum, I did buy some stocks while this stream was going on. I bought some more Oxy. I bought some more Canadian Natural Resources. I bought some more Chevron. And I bought some more SBL. And I like days like this right now, again, buying insurance and energy. If anything, I'm hoping my energy stocks just do terrible. The energy prices go down, oil prices go down, so all my other stocks can flourish. But if the market's going to offer me discounts, I'll take them. I'll take them on Chevron, and they pay a nice dividend. All these are dividend payers, by the way. All these will pay income. So this is what I bought this morning already. And I'm probably going to buy some more. We'll see how the market behaves today. Stocks are moving higher, but Microsoft, why is Microsoft not getting any more love? NVIDIA's getting some love. Micron, man, it's a love fest. Intel's going higher. Meta, we covered that. Tesla's going higher. Wow, look at the financial space. Woohoo. Nice and green. The banks are doing great. I remember on this stream, you were saying that, if these private equity groups are struggling, it's probably going to set up banks to do better, because if another corporation needs major financing, they're probably going to be like, all right, well, we can't go to Blackstone, BlackRock. We got to go to JP Morgan. We got to go to Bank of America, Citi, or Wells Fargo. So that's looking pretty good. Even healthcare, man. Geez. It's a good day, Daryl. It's a good day.
Pretty green out there.
Yeah. I should just screenshot this and not check the market for the rest of the week. That'd be like taking happy pills. All right. Great. All right. Let's keep at it. What's going on the stream here? So DJ's showing up. Good to see you, DJ. Let me know, guys, everybody on the stream, if there's a stock you want to look at, please put it in the chat and we'll go over it. I think we can go over to Nebius. Let's take a look at Nebius. Nebius is up 13% on news that Meta is going to send some major workloads over to Nebius. Nebius, I had the story wrong on these guys, and thanks to the comments on my videos, a lot of these companies moved from the crypto Bitcoin mining space into cloud services. And I think this one is not the case. These guys were a search engine, I believe, in Russia, and moved into the cloud infrastructure space. They are up 344%. Now, they did have kind of a consolidating period here, but today, boy, the stock's moving higher. Now, Nebius is enjoying a lot of demand going into the AI space. Now, these workloads to build these major models, it's kind of a temporary build, right? It's going to be a couple years. Once those models are built, we're going to get into the inference phase, and the demands are going to lower or go down a bit. And second is, I saw a really good video. Who produced it? I think it was Bloomberg. And they were talking about, cloud infrastructure, data center, and so forth, and how the demand is really high. But they also put out there that The space is beginning to see new ideas, especially come out of China, that are using less expensive hardware and lower energy consumption. So, what's good about the restrictions, the chip restrictions on China for China, right? Let me repeat that. What's good for China is that they've been restricted because they're scientists and they've got some real good ones. Necessity is the mother of invention. So their scientists are coming out with full stack AI hardware and solutions that use less power, and the way that they've written their code, it's more efficient. That's a major threat to how we're doing it in the States. Now, the States is always going to be leading, like, hey, we're going to have the coolest, fastest AI models, period. Okay, that's fine. But if they cost like, $1 billion to build, then you got Chinese models that cost 100 grand. Boy, 100 grand looks pretty good, because a lot of companies cannot afford to spend the kind of money that Meta can spend, that Google can spend. Yeah, they're going to spend what they're going to spend, and they can justify it. Period. But what if you're just a manufacturer of cars? You're not going to be pouring in the kind of money that Meta, Google, Anthropic, and OpenAI, and all those guys are pouring in. So those guys are probably gonna be like, hey, that Chinese model looks pretty darn good. It runs on less power, so it's not going to be, the cost of ownership's far lower. All those things are going to affect the amount of demand that Nebius is going to be seeing in, let's call it a year, 2 years, 3 years, because we've been in this AI thing for 3 full years. Okay, 3 full years. Cat was out of the bag in late 22, and we've been, just cranking up since. And I think that we're going to start to see, we've already saw it, right? We saw Gemini go from way behind OpenAI, and then they kept making progress, and then they leaped forward, and now Gemini is pretty darn strong. Claude is pretty damn strong. OpenAI was strong to begin with. They're doing great. But next thing that happens in technology is the cost goes down. Okay. I'm like using a computer here. Like, my first computer was nothing compared to what I'm using here, right? It was single monitor, and it was this terrible monitor. You remember the monitors of 40 years ago. Mm-hmm. And it cost me like $2,500. And it cost me the same that I bought a vehicle back then, a little truck. It was a pretty decent little truck. This cost me the same as a car. Okay. And it was worth it. It was worth it. And it was nothing compared to what I use today. Today's computer, I don't know if my computer's at least 100 times faster. The storage on it is at least 100 times bigger, and the price tag. All the equipment I'm staring at here was under $1,000. And I went pretty good. I have a GPU on my server, on my computer. So I'm able to buy equipment that's far better for less money. That's technology. And when we talk about Nebius, we talk about cloud infrastructure, that is going to happen. Over time, competition will enter the picture. GPUs that maybe they're getting 60 grand for a piece, that's not going to work in 5 years. Those GPUs will probably sell for 5,000. And that's the nature of the business, is over time, hardware costs go down because innovation keeps bringing new competitors into the space. The power consumption's the biggie, right? Because power is power. And Nebius, I don't know where they get their power, but we'll see. We'll see where they get it. So Nebius is having a great day. It has a very high PE ratio. And the reason why investors are flocking to it is, look at this growth, 350%. Whew. Hang on to your hat. because it's going to fly off. Look at that. So that looks really good. They are burning cash because they're putting a lot of equipment into their data center. That's understandable. Margins look pretty decent. Although you see this transition when they went from another business into the business they're in. So that looks pretty interesting. Forecast. We got 8 analysts forecasting the Nebius business, and they're going to keep growing. This year is a giant growth year, and the big deal with Meta just is going to underline this growth, and it's going to grow next year, and it's going to start to slow down a bit. Now, this is a business that may have to slam on the brakes because you got Meta, but what if Meta decides to go away? Oh, man. Then a lot of demand just left the building. And demand could come down very quickly when it comes to cloud infrastructure. Not saying it will. I'd rather be invested in Amazon because AWS is the biggest cloud infrastructure business in the world. Azure, Microsoft, Google Cloud, Google. Those businesses are built to last. They're going to be managing workloads for the major companies around the world for the next 40 years. It's a very lower risk, high returns over the long haul, but it's not going to be, you're not going to buy Amazon and the stocks can go up 347%. This is when you come down in market cap and you buy into these stocks that are a smaller market cap with these incredible growth rates. Congratulations to Nebius. I know that there's some investors that participate in this community that are in Nebius. Congratulations. Don't forget about this channel when you're a billionaire on your private yacht in the Mediterranean because you made so much money. All kidding aside, congratulations. And I'm glad you made a lot of money on it. What do you think about Nebius?
Chart looks interesting here. So we saw that they peaked out in the middle of January. Then again, in like the third week of February, they came back and tested that. The question was, were they going to break above the previous double top or fall back down? And we can see that they are moving up today. I'm looking back at the RSI on these last 2 peaks. Managed to get above just 60 on that one. Right at 60 there, right at maybe just below 60 there. Today they are breaking out above those previous highs, going all the way back to October. The PPO is in bullish territory, and it looks like the level that we're trading at right now exceeds the 2 previous peaks. So it's going back all the way to the 30th of October as well. We had been in a pretty significant distribution, but you can see that that's on its way back up at the moment and has been since about the third week of February. Money flow is currently positive. So this one's looking pretty strong at the moment.
Excellent. So we have a request from DJ. He wants to talk about Coherent, and Coherent develops, manufactures, and markets engineered materials, optoelectronic components and devices, laser systems for the use in industrial communications, electronics, instrumentation markets worldwide. It operates through 3 segments: networking, materials, and lasers. Networking segment offers transceivers, systems, subsystems, modules, components, optics, the semiconductor devices for data center and communications applications. Yep. So we know why they're cranking. Is the data center is getting built out, and these guys are coming along for the ride. Over the 1 year, up 303%. Whew. Look at that chart. Jeez, beautiful. And it's become a market cap of 48 billion. They're a $6.3 billion revenue company. So you're paying about 8 times revenue for the business. PE is 41. We'll take a look at their growth. Analysts think it's getting a little expensive. So their growth rate is not as incredible as I think we saw Micron. Just their numbers were just ridiculous. These are not ridiculous numbers, especially since we know that the data center is booming. But they're very good numbers. I mean, they're very good numbers. 18% growth. That's great. And gross margins are not good. 36%, not very good. It shows that their intellectual property, their patents, there's competition. There's others that could bring in a solution that competes with them. And look at their profit margin, 4%. So this is not looking all that great. Man, investors have really bought into this stock. There must be another story like, hey, they came out with a new product and that new product is awesome and it's going to make lots of money. The growth looks good we're in the year it's going to end here in June of 26. They're growing 21% this year. They're going to grow at 23 and then 19. And their profitability is going to go up, but their PE ratio is going to stay elevated. And frankly, like NVIDIA is growing better than this. And there's a lot of semiconductor companies that are growing way better, that have way better margins, that have a lower PE as well. So this one here is looking too expensive for me, but the stock's flourished. Oof, beautiful. What do you think, Daryl?
Let me finish up this comment here.
Mm-hmm.
So they're trading above an upward sloping 50 and upward sloping 200. The 21-day is flattened out over the past week. They are trading above that today. The RSI is just above the 50 line. The last couple of times that they came down, they held that 50 line except for one day back in early January, and that really goes back all the way to September. They did drop pretty severely back here. I don't know exactly what happened. It was on huge volume too. We do have a crossover to the downside in the PPO that occurred on about the 9th of March. And the RSI is not quite confirming that yet. So it has not dropped below 50. So I wouldn't consider this a sell signal, but we are seeing some little bit of degradation in the momentum at the moment, but it is holding above the 50 line. We've had some distribution over the last 2 weeks, but it's been moving pretty much higher for the last year. Money flow is currently bullish. It is above the green line there. So it looks pretty good. It's been strong ever since we came out of the tariff announcements back in April.
Yeah, definitely a lot of investors are buying it, but the fundamentals just don't add up. Here's my valuation on COHR. Here's the stock price. It's been flourishing, but it's been getting away from its intrinsic value. It doesn't have very high margins. It doesn't produce enough cash flow or profit. And the value of this business is way down here, but the price action is way up here. We'll see how this ends. I guess it could go to the moon. We'll see. I just think that there's some other semiconductor stocks that fundamentally give you a better valuation and they're doing well, but not, I mean, this one's doing exceptionally well. So very interesting. All right. I think, was it Dre wanted to look at ARCC? Ares Capital. I think this came up earlier. Over the 1 year, down 15%. Over the 6 months, down 15%. I thought it was going to be worse, and there's two Ares stocks.
Ares is the management company, and ARCC is their BDC.
Bingo. Thanks for the explanation there. So this here over 5 years, it pays that big dividend. So, I mean, if you don't really care about stock price appreciation and you really want that income, here's an idea for you. That's not in my, preference list. I want appreciation. But this one here is a smaller cap, 13 billion. Really low PE ratio of 9.3. Analysts think it's discounted. And what do these guys do? What do they get involved? So Ares Capital Corporation is a business development company specializing in growth capital, acquisition, recapitalization, mezzanine debt, restructurings, rescue financing. So they're right in the thick of it, right? They're doing all this private financing and so forth. And that's where I don't know that it's going to change all that quickly, because I think the news is pretty bad and investors are going to be afraid to go into this space. And at some point, there might be real good value to buy in and take advantage of, but it's early. I mean, these news stories are really fresh. So I don't know if it's going to happen anytime soon. It might take a year, maybe two. Overall, this is a very good dividend. So that dividend keeps getting better as the stock price goes down. I wonder if they can pay that dividend. Can they afford it? They're paying out about 100% of what they have to pay dividends. And the revenue, pretty stable. So this one here is a dividend play. It is caught up in a industry that's under a lot of stress, but curious to see what Daryl's going to say on this one.
So this is one I've invested in. I was trying to see how long ago I bought in. It's been a while, 2021 in March. And they have a book value of $19.96. I think it may be 94 cents. So I get interested anytime I see their price trading below their book value, and it's certainly doing that right now. They've been on a downtrend. The private market concerns, credit market concerns started way back here, so they really took a hit. And when they crossed below their price to book, I had trimmed some shares pretty significantly here and earlier. But once they crossed below that, I started picking up shares, and I'm currently going a little bit overweight on this one because they're at a good support level from October. They dropped below it for a couple of days, but they are trading above that right now. So my costs for my current shares are about $18.50. My net cost after dividends, options, and all that stuff is only $5 a share. So I have pretty low risk on this one. And I do have a put right now at $18 expiring this Friday. They are trading above $18 at the moment. So if they continue that, I'll keep the premium of 35 cents for each contract. So that'd be $70. If they trade below that, then I'll pick up a couple hundred more shares, and then I'll probably just hold where I am because I'll be a little bit overweight on this particular position.
I've got good news, Daryl.
What?
I've already made money on all the energy stocks I bought this morning.
Oh, wow. Good news.
I may have a future in day trading. Forget this long-term trading where I make consistent returns every year.
Yeah, I
sleep
wouldn't
well
bet.
at night.
I wouldn't bet the card on that one, man.
No. I'm just joking, but good to see that energy stocks are going up a little bit. It's also good to see that Meta is flying up. Meta has not been a very good performing stock over the last year. I've made a lot of money on Meta, so it's staying in the portfolio. But there's a lot of green on the screen. Very, very good day. Very good day, and especially on a Monday. It's good to see that Monday is getting off on a very positive note. We've had some crummy weeks. Yeah, so maybe I got to change the channel to Victor Day Trading. Nah, I don't think that's going to be the case. I just enjoy, we try to play to our strengths, right? Individually as each investor, and I really enjoy trying to find really good businesses that are just misunderstood, underappreciated, buy them at the right time, and it's just so fun to have those stories play out. I don't want to give up on that. Day trading is for somebody else. So, all right. So, very fantastic day. What's going on this week with your channel?
Well, yesterday I did a special version of my stock chart analysis that I do each week. I usually focus on individual holdings that had some interesting looking charts and any decisions that let me make this full screen so you can see this. But this week I didn't really cover any individual charts. I really focused on oil. If you haven't been watching the US dollar, it's been doing some things this past couple of weeks. And then what I really focused on, because on Friday I had a trigger fire where over half of the S&P 500 was trading below their 200-day moving average. And when that happens, you're typically entering into a breakdown zone for the market overall. So I go over all of the market breadth charts for each sector, for the major indices, and then I looked at the bullish percent index for each of the sectors as well. So this was kind of a special edition just because that trigger or that alert was triggered on Friday. It did fire again today, and we're back above 50% level for the S&P 500. So we'll see if it can hold that or if it drops back down below that level.
All right. Looks good. And just to let you guys know, I'm on my channel. I released an Adobe full analysis on it to members. So that was released yesterday afternoon. And I'll be releasing right after this stream a video publicly. And I forgot the title on it. So let me look that up really quick. And it's going to be covering Workday. So full analysis on Workday. That'll be public, so anybody can watch it. I'll be creating some more content this week. I think we've got some good stocks that are announcing. We got Micron, Alibaba, a couple of others that are worth taking a look at. So look for that. I also created for gold level investors, I created a video. I went through my portfolio and went over the stocks that I've been buying over the last 4 months and how I'm trying to beat the market this year. On the website, just not a lot of building on the website, just some good stuff out there. I'm going to keep adding to the blog. And we got the contest going. Maybe we can visit that real quick in a bit. But yeah, I'll keep building on the website and adding apps to it. Take a look at your leisure, and I'll continue to make it better. Looking at the contest, looks like, let's see here. So where's Nebius? Here's Nebius making its march up higher. Nice. And Here's where things stack up. Looks like Genetic Smike's kind of like has a really, really good lead. He's probably going to win the subscription to Stock Analysis after the month is over, and then we'll reset. We'll see who can win the second quarter, and it'll still be the top stock for the year to date, but we'll see if the pecking order changes from April 1st through the end of June. So that's going on there. All right, so I think we got another request coming in on CSWC that we can look at. And CSWC. Capital Southwest Corporation, big dividend, 12%. Oof, and that's not too bad, but I mean, you net out, 8.5% rate of appreciation. Okay, so these are big dividend payers. Wow. So these guys do credit, private equity, venture capital. All right. Over the year to date, I mean, as these things sell off, so long as these guys aren't going to suffer a major loss, a sell-off is actually good news for somebody that wants that dividend. So I think Mike wanted to see if you could take a look at the charts on CSWC.
Okay. When I look at asset managers, one of the first things I do is go and look at the book value. So it's 1750. So they are trading way over their book value. That's always a bit concerning to me. 50 days moving higher, the 21 days moving lower, the 200-day is moving higher as well, but looks to be slowing its ascent and maybe flattening out here. Are these? I presume those guys are in private credit. Do you know that, Victor?
Yeah, correct. Okay. Venture capital,
right.
Private credit.
So it's interesting that they haven't taken necessarily the same fall that all the other ones have taken together. And getting back to ARCC for a moment, anytime that you've seen any news reports and they'll lump some of these together, Ares Capital, to my knowledge, has not been mentioned specifically yet. I have not heard of this company being mentioned either specifically. So I like to have the ones that I own kind of stay out of the news cycle a little bit. Like I sold out of Blue Owl Capital a while back, and I'm certainly glad I did because they've been taking it for sure. So anyway, Mike, the only concern I have is they're trading so far above their book value. We see a declining RSI. It's currently under 40. We had a buy or a sell signal basically at the end of January. And then that really got confirmed in towards the third week of February. They do have good accumulation at the moment. They had been in distribution, and this would have been back when private credit concerns first started. And then there's been some specific companies like can't remember whether it was Blackstone or BlackRock. Their TCP fund had to start gating, and that hit all of the BDCs, and even Goldman Sachs and JP Morgan were mentioned about limiting their credit space and gating some of their private funds. So it's even getting to the big guys at this point. But this one's still holding up pretty well. Just keep in mind that book value, because this is what the company's really worth.
Yep. In their business, that's what they're worth. Perfect. Thank you, sir. All right. So let's go ahead and land the plane. Looks like the market is going to be green for the first hour of trading, and some stocks are just going to go up. Nice. Very good. Good to see that software is up. But look at that. Adobe still getting hammered,
Yeah,
even on a super green day.
we need to take a look at that chart again.
And then we've got, man, there's a lot of companies participating. Tesla's up 3%. Looks good. Man, I've made more money on my day trade, Daryl. I think there's going to be free lunch on the menu for me. All right, everybody. That was a cool stream. Thanks so much, Daryl. Quality work. Thank you very much. Good luck on your trades this week. And everybody, thanks for tuning in. Really appreciate it. I am in a good mood, if you haven't noticed, because the stock market's up a lot. Very good. But this is a rough year, man. It's been a tricky one. So let's keep doing our homework and let's figure out how we can beat this market in 2026. Tune in on Wednesday. We're going to do the same thing at the same time on Wednesday, and we welcome you to join us. I'm also going to stream tomorrow afternoon, evening, and Thursday afternoon, evening. Really appreciate all those who attended this past week in the afternoon, and would love to have the same audience join, and we'll take a look at some stocks after the market closes on each of those days. So that's it, folks. You guys have a terrific day. Thanks again for tuning in.
Take care, everyone.